Hi everyone, it's Jack back again with another video. Today I'm going to be trying to do a 5-minute analysis of Snowflake, the software provider. It's been all over the place in the past year, as high as $405, as low as $185. At today's price, around $278, it's an $84 billion company, with trailing sales of around $1 billion. Not much maths needed to work out, that's a price to sales of about 84, absolutely crazy high valuation, and that's after a 30% drop. I'm going to try and see if this can be rationalised in the next 5 minutes. Interestingly, Snowflake has took nowhere near as much of a hit as the majority of really highly priced stocks, so that is interesting in itself. Snowflake's software is very data orientated. Data is absolutely essential to the modern corporate world, particularly for decision making and future planning. The platform Snowflake provides essentially an all-in-one solution to data management, storage and analytics. They provide services for data lakes, data warehouses, analytics data management and a whole lot more. This is a massive reduction in complexity for individual businesses, and I've seen a whole number of estimations for the cost savings here, but what you need to know is it saves money for the businesses and it saves complexity. So valuable to businesses to essentially bundle all of these solutions together. It also creates an enormous amount of switching costs and therefore a moat for Snowflake. Snowflake is built upon Amazon Web Services, so has no need for costly physical hardware. Using AWS S3, Snowflake has incredible data durability and is an extremely reliable service. These cloud platforms are essentially competitors to Snowflake, so need to be watched. However, the level to which Snowflake has gotten to already, I think it'll be very difficult to replicate in the short term. And of course, Snowflake is compatible with all three of the major cloud platforms and many others. One of the key advantages for this business is the total addressable market it's trying to target. The TAM for Snowflake is already very large. The market for data warehousing alone is $14 billion. The cloud data platform market that Snowflake itself predicts to be $90 billion there or thereabouts, and this is dwarfed by the whole data cloud opportunity, or the broader industry. These industries will be growing at strong compound annual growth rates for the foreseeable future as the corporate world evolves and data is only becoming more and more important, as will be artificial intelligence, which is backed by data. These total addressable market numbers are for an industry in its relative infancy, in my opinion. There's a lot of room for growth here, and these are only estimations. I actually predict these will be a lot higher in not too much time. Another great thing about this business is its ever-expanding ecosystem. It's exactly what I want to see a company like this doing, creating a network effect and high switching costs. So many of these ecosystem partners in the majority of offices worldwide, you can see Salesforce, AWS, Azure, Google Cloud, Power BI, Tableau, amongst tons and tons of other names here. These are absolutely crucial for the growth of Snowflake and for creating this moat and switching costs. The thing that obviously matters most here is how they're addressing this market, and the numbers are some of the best numbers you're likely to see for a company with over $1 billion in revenue, and you'll really start to see why it commands such a premium. 110% revenue growth for the product revenue segment, which is the vast majority of the business, so we can essentially call this revenue. You'll see a deeper dive in the next slide. Very strong number, very strong growth. There's not much more to be said there. 110% year-over-year growth. And this sort of scale is absolutely excellent. Net revenue retention of 173%. This is one of, if not the highest revenue retention rate I've ever seen. It's obviously a very important metric for software as a service companies with that typical land and expand type of plan. Customers are spending on average 73% more. This is absolutely ridiculously large number. Even companies like Datadog, they're in like the 150% range, and Datadog is famous for its DBNR. This is absolutely outstanding. Speaks volumes to how well received and crucial Snowflake's product is to its customers. They now have 148 customers with more than $1 million in product revenue. Again, speaking volumes of how well received this is by customers, and they keep spending more and more and more. And the gross margin is not only excellent at 74.6% non-GAAP product gross margin, but improving. This is not the gross margin of the whole company, because as I said, it's for the majority of revenue, not including product. But this is an absolutely excellent number. Like, make no mistake about this. For the majority of revenue to be at more than 70% gross margin, this is superb. And just taking a deeper dive into the revenue and the scale of growth. 124% year-over-year growth, quarterly revenue 110% year over year. You can see from Q3 2021 to Q3 2022, the revenue has more than doubled from the product segment, and has exactly doubled for the professional services and the revenue segment. This is tremendous growth. The product segment is what we're really interested in, and this is growing at far above double. I'm very happy with this. So Snowflake is obviously a great company with the potential to become an absolutely outstanding company. It has excellent growth numbers, probably the best net revenue retention rate I've ever seen, and excellent gross margins. The company has strong moat in my opinion with a good network effect and high switching costs. There's no real customer concentration either, which is normally a type of red flag in these situations. The company is not without its risk, and the key risk here is competition in my opinion. The key name being Databricks, which is still a private company. Snowflake is the larger of the two, and in my opinion an easier sell to customers, partly due to its use of SQL rather than Spark. There's a couple of other reasons which are more in depth, but I believe Snowflake is the clear leader in this field. And then of course there's the large cloud incumbents, Amazon Web Services, Microsoft Azure, Google Cloud Platform. They have the resource to take on Snowflake, and they could integrate it perfectly with their platforms. I think it's a bit too late in the game now. Snowflake has an excellent reputation. Current customers will be very difficult to acquire from Snowflake due to the high switching costs, and these customers are growing at a fantastic rate on their own without Snowflake having to add customers. Not to mention the time requirement it would take to catch Snowflake. So I think Snowflake's built out a nice little niche for itself. It's a useful product, and it's only increasing in its use case. I think this is a company that's doing great things. I just don't think I can buy into it at 80 times sales in the current market environment, even if it hasn't declined as much as other companies. I just think 80 times sales is just a bit ridiculous right now, even for an excellent company. There are other excellent companies that are not trading at 80 times sales in an inflationary environment where growth stocks are getting absolutely killed that I would rather put my money in. But that being said, if Snowflake is a significant decline, I'll be very interested in this stock. Thanks. So if you like the video, please like and subscribe to help the channel grow. Thanks.